Okay. Today, Dow is down 4%. It's 10% down year to date. Inflation is on a rise. Doesn't look like it's slowing down. Car sales are plummeting. Feds decide they're going to raise interest rates another 0.5%. So the question is, are we headed to a housing crash in 2022? So today we're going to look at, can the average American afford a house with the rise of inflation, the rise of interest rates, and the rising home prices? So as we get into this, please let me know your thoughts. Are we going into a market correction, a housing market crash, or is the housing market going to continue to be on the bull run that it has been for the last 11 years? Let me know your thoughts and leave a comment below. So we're going to use the local Ada County median sales price and median household income to go to the whiteboard, but you can take this same information, the same strategy, and take it to your market to see if... All right, so let's go to the whiteboard. Keep in mind right now in Ada County, median sales price is $575. So we're assuming that you're putting 20% down, which gives us a mortgage. Let me go back to my calculator real quick. Gives us a mortgage of $460. So mortgage of $460. If you remember, we had the two different interest rates, 2 3/4%. These and we're just going to use for this video. We're just using owner-occupied interest rates. Okay. So we had 3.25 and then 5.5%. Our mortgage was $2,000, give or take. So plus, minus, and then $2,600 plus or minus. Okay, so when a lender looks at a borrower, they look at the front end ratios. A lender's going to use the front end ratios. The front end is, in a nutshell, it's your principal, your interest, taxes, and insurance, and then if you have any HOAs. All of this added up cannot exceed 28 to 31% of your monthly gross income. And so we're going to look at right now in Ada County, the median household income is $73,000. So that's a household income. We got to break that down by 12, and we got to break that down into monthly to be able to calculate all of these three things. So let's do that real quick. At $73,000, we have $6,083.33. This is monthly right here. So only 28 to 31% can go towards your mortgage, which is principal, interest, taxes, insurance, and HOAs. So if your household makes this much money, your mortgage cannot exceed anywhere from $1,700 to $1,850. Again, plus or minus. I'm going to round for this video. Plus or minus. So based on this, so again, this is median household income. And this is our median sales price. So if we just use the front end ratios, we can already see that we have a problem here. We had a problem at the beginning of the year from the average sales price mortgage based off 3 1/4. But with the increase of up to $2,600 for that same house, we have a huge problem with the median household income. So that's why some news articles are saying that the Boise area is becoming unaffordable for those who live here locally. Now the good news is there's one out of 5 homes are being bought in cash. So this is super important to know because that still shows that 1 in 5, we don't have to worry about them making a house payment, right? It's paid in cash. So 1 out of 5. And back in 2006, 2007, 2008, 1 in 10 houses were being bought cash. So we're double that right now. So that shows good news. If the feds continue to rise, right? We just heard yesterday they're going to rise 0.5%. If they get all the way to 7.5%, that means the mortgage is going to be around $3,200 plus or minus, and that doesn't include taxes and insurance. So right now we have a problem with the front end ratios that lenders use to approve buyers. We have a huge gap, almost double. So what that would tell us is somebody would have to make their household income would have to be $140,000 or more just to be able to afford that same house in the higher interest rates. But the question is, with this affordability issue and the front end ratios that people have to use to qualify for a loan, are housing prices going to go down? And I mean, I'm not a rocket scientist, I don't have a crystal ball, but based on just these factors alone, I would say that we're probably due to have the home prices cool off and come down a little bit. So keep in mind, something that's been driving our home prices up here in Ada County and throughout the United States is our demand has been through the roof and our supply has been so limited. But with these new interest rates, some of the buyers that were able to buy this, again, $2,000, almost over a 50% increase if we get to 7.5%, that's going to drive our demand down because we're going to have less buyers that can afford this. And when the demand goes down and the supply stays the same or increases, in return, we're going to have the supply cost of whatever that supply is come down as well. And so that's why we think, hey, these prices should cool off. Based on these factors, what do you think? What do you think is going to happen in your current market, or what are you going to think is going to happen here in the Idaho market? Like I said, I think my thoughts are we are due for some kind of cool off, especially if we hit that 7.5%. But will we actually do that? You know, we thought there was going to be a huge thing on foreclosures coming after 2020 when COVID hit and everything shut down, but the government stepped in and changed some things, so we didn't see a huge thing. Instead, we saw the exact opposite. We saw a giant bull run again. So what are your thoughts? What do you think is going to happen? Obviously, none of us can predict the future because we don't know. There's things that we can't control and we don't know about. In the day, we aren't here to try to scare anybody. We're just trying to educate. And we have a lot of clients that come to us and say, what should we do? What do we think about the market right now? I personally, my wife and I, we are still looking at investing in real estate, but we're being a little bit more cautious than if we were a year ago or 2 years ago. And so we just want to give you education on really what are the nuts and bolts behind everything that's going on as far as the lending goes, as far as the housing prices go, and how it affects us every single day.